Hey guys, it's Sam. Good morning to you. Monday morning here, 8:43 Texas time. I thought I'd just circle back and take a look at Ethereum and Bitcoin, picking up where we left off from Saturday's video. And of course, we got some volatility in the markets as we we're expecting over the weekend because we've got news now driving the market. So what I thought we'd do is approach the market with the same methodology as we would always approach the market. I thought we'd look at it as though we were coming to the market fresh today, and we were not in a position, and we were simply analyzing where it is and where we're likely to go. Now, I did get a request to look at Ethereum against the dollar tether on Poloniex. So while this is not the exchange we were looking at on Saturday, again, it really doesn't matter. There'll be slight discrepancy exchange to exchange, but it really won't matter in terms of how we approach the market technically. So again, we've got a news-driven market here, and my premise to you is always that why the market is moving is not as important as how it's moving, right? Everything that can be known at any given moment in time is reflected in the price. That's the assumption that the technician makes. So while we want to have a conscious awareness of what might be causing this volatility, really all we're looking for is to see if we can get ourselves positioned to take advantage of the volatility, see if we can find a risk-reward scenario that's favorable, and if we can get a trade that gives us a reasonable expectation for some profit with relatively low risk. So here we have Ethereum against the Tether on a 4-hour on the Poloniex exchange. If we were coming to this fresh, again, as I've said to you before, my premise with Elliott Wave is that it should be so incredibly obvious to the eye that you almost can't avoid seeing it. So if I were coming to this market fresh and just looking at this chart, of course, this is the first thing that I would see before I pull any fibs, anything else. I would simply look at this and say, well, clearly we've got some sort of potential for an impulsive structure. Now, regardless of where you are in terms of your Elliott knowledge, the most rudimentary, the fundamentals of it is that the market trends in a 5-wave sequence and corrects in a 3-wave sequence, and they're often. The trend is done in numbers. The corrections are done in letters. So we see a 1, 2, 3, 4, 5 correcting in an ABC. And we can see this very clearly here. We have the potential. It's always just a potential roadmap for a wave structure. So first thing I would do is put that wave count on it. Again, you don't have to have it because the wave structure is created from the fib retracements and the targets. So in the most rudimentary Elliott analysis, the one important rule that you need to be aware of is that we don't want wave 4 overlapping wave 1. That still can lead to a 5-wave sequence, some of the nuance of Elliott trading. It can still lead to it in certain circumstances, but for the traditional impulsive wave structure, we want wave 4 to stay above wave 1. So one of the things that you always want to do is mark off the wave 1. Now, of course, take note here, right? So that we go within a few ticks of that wave 1 high, and you say, well, that's interesting. I promise you that's not coincidence. But regardless of wave structure, if we were just coming to this and pulling some fibs, we'd of course start from this low. And pull to this high. And what do we get? Again, that's not coincidence. All right, so you can say, well, the algos that are following wave structure are here to buy it to defend the wave one high, and the algos that are working off the fibs are there to defend it off of the 50. Either way, this is not coincidence. So this is an important pivot for us. So looking at this now, we see, well, we can start making some projections because the expectation is that we get to a new high. So if we look up above us here, there's our negative 23.6. So that would be our first target in terms of entering from the long side. But we also know, and we visited this on Saturday's video, that we've got the other side of the market working against us. So the bears want to see, because we've not broken through the 618, there's a group of traders that want to see this market and are going to defend this swing high because their target is down here at the negative 23.6. Now, take note that the negative 23.6 is within a tick or two of the 618 of the full all the way halfway back retracement. So this is a very reasonable target and a very real possibility. It would not invalidate a 5-wave structure. It would just change the nature of it and some of the projections that we'd use. So we just have to know that that's there, and that's an equally possible outcome. If we were to break this low, that's likely where we're headed. And as well, it's a break of the 50 headed to the 618. So we got to be conscious of that. So if we're entering the market to the long side, this is an important level here. So we can be relatively tight with our stop placement here, because we know if this low is taken out, then at least our premise and our hypothesis of where the market's headed and where the important swing low is has been invalidated. So just looking at this now, I'm going to take this off and mark it since we know this is an important swing level here. We really want to see the market get through this in an impulsive way. So then we create the possibility, again, since we're looking at this from an Elliott count perspective, we want to see something impulsive here. So so we have the possibility for this. We have that possibility. Now, you absolutely could place a trade right here. Absolutely could put a trade on right here, knowing that that's a target, knowing that that's our important swing low, and you've got just about 4 to 1. 4 to 1. You could be in the market right now. You could turn the video off right now, go place an order. Nice looking trade. Absolutely nice looking trade. I'm tempted to do it myself. But what we want to see here is we want to see impulsive movement. And right now, really all we see is chop. There's this indecision that's hanging over the market. But this is absolutely tradable. So if you haven't left to go place this trade, let's take a look at a little more detail to it and see if we can fine tune it. Since we have two important pivots here, we also want to draw from the wave 2 low to the wave 3, as that's an important relationship. And take note that we get just a few dollars from this swing low above the 618. Now, again, in fundamental Elliott analysis, we don't want a wave 4 going beyond the 618. So the fact that we've held this and bounced at this 50 off of the full all the way halfway back, that's a good sign. So again, what it does is it strengthens the importance of this pivot. And in terms of our stop placement, if we wanted to give it a little more room, we could go underneath this 618, knowing that if that's the case, then we're likely unfinished with this correction, and we more likely have an A to a B, and then we're heading down for a C for a deeper correction. Right now, our bias is to the long side. So we could clearly, I would put a channel on this, looking for at least a retest of the upper channel. We could also, in the same way, you guys know pitchforks. If we hold above this and stay within this, I'm going to take that wave off. A second. Median line is the natural target. So it becomes a question of when we get there, how high it goes. So for a wave 3 projection, let me get that back on there just so I can clarify for you. Come here, guys. I'll put the wave back. Put the wave back for you, so you can see it. I've got this ass backwards. Downside of not having the wave showing. Okay, so we know in basic Elliott trading that the wave 3 cannot be the shortest wave. So we know it's got to at least be, 100%. So because of the depth of this low, here we go. Because of the depth of that low, that 100% is just above that wave one high, which also coincides. Remember, this is why it's important to be conscious of this. Very close to the 618. So this is, and here, if we were to hit this right at the median line, we'd be expecting to see some sort of a reaction. As to whether or not the market gets through it or not remains to be seen, but we would expect some reaction. So if you were long here, we move up to 342. You've got $42 of profit in that trade. That's a logical place to tighten up your stop at the very least. But if we're going to get a good wave 3 out of this, and we're going to head up to these higher targets, then 1.618 of the length of wave 1 is the next likely target, which happens to coincide with our previous swing high. So these are very likely reaction points in the market. Reaction points. So that's a reasonable chart to have up here with the expectation that we've got a solid pivot low. We've got a higher low here. We've got some targets up here. We know we're going to hit some resistance here at the negative 618, which happens to be very close to that swing high, which happens to be right at the 100% price projection, wave 1 from the low of wave 2. We've got an upside target here of 1.618, and we've got a total upside target ultimately up here at the negative 23.6. Look at this cluster up here between 446 and 466. Very reasonable targets to have and draw until we're proven otherwise. This would be our target zone. That's your target zone right there. So you could be entering this market right now, and I'd be prepared to enter and accept being stopped out on some volatility multiple times because this is such a good structure. Such good structure. Now let's add some oscillators to it, see if that helps us with some timing. Well, we've got the energy built up here for this to at least get up to the up above 70. So we've got that potential. We have divergence here, but we don't have a lower low in price, so that's divergence is to be expected. We haven't gotten to an extreme on the VWAP. So we've got all the ingredients here for a trade to move higher throughout the course of the week. Right? Remember, this is a 4-hour chart. So we've got all the ingredients, knowing that this is our important swing pivot low. We want to stay above this and ultimately above the 618 here. So we've got a framework from which to approach the market with that long bias. So I'd be a buyer here. I'm already long the market, but this is a reasonable place to be adding. So if you're in or not in, consider this definitely a trade. I'll post this up on the Twitter feed as a new trade as well because that's a good looking trade. Okay, let's quickly switch over to Bitcoin. We were on Kraken, as I recall. So Bitcoin, that same indecision is here. So let's take this down to 1 hour. So this is what we saw over the course of the weekend. There were some reasonable signs that we had gotten into an impulsive move, and then the market got that new news this morning and just sold right off. So clearly we've got a support zone established down here. We visited 3 times, and we haven't been able to break it. So we know we've got traders that are defending down here at these lows. Right? It's from an LA perspective, it's kind of an ugly pattern. We did get a 5-wave impulsive structure here, so we could make the case that we have a leading diagonal there. So this is a reasonable case. But the depth of the retracement is not ideal. But that's the scenario. If you're bullish, that's the trade right there. So we know we've got this well-established support here. We've had a 5-wave sequence here, which implies that the trend to the bullish trend remains intact. We haven't had a very clear. We'd have to go down to a 15-minute. Not a great ABC, but you could make a case that you've had It's not ideal. It's not ideal. You could make a case that you've had enough corrective activity here. You've double bottomed and tested that bottom now 3 times. Even with this news in the market, we're about to push through the 200. I'd like to see that happen. We know we've got the other side of the market working against us. So you want to see that. You want to see that break. We're just coming up to it now. If we can get through that, that's a very good sign that we're off for an impulsive move here. We know that we've got potentially, at the very least, we'd want to see 100% of the wave 1 projected from the wave 2 low. So we've got some reasonable targets here. I'd put a pitchfork on it. Whenever I see 3 pivots, I want to get a pitchfork or a channel on it. So we've got a likely target here. We know we're going to hit some resistance when we get to this. If we can get through it, head towards this, then we get more confidence in the count and more confidence in our projection. The most troubling piece of what we see here is the depth of the correction. The depth of this from this high, from this swing low to this what is now a wave 1 high, going through the 786 to retest that support. That was troubling. We still have the possibility that on a larger time frame we haven't completed this correction, but at this point in time, if we can start to get through, if we get through the 618, that would be the first bullish sign. So on this smaller time frame, if we get that, we know we're going to get some resistance at the median line, which happens to be right in line with the 786. Then the next pullback is where you might approach it from a trade if you're not already long. So that's, if you're coming to this market and I just put this chart in front of you, there would be a lot of confusion as to what's actually happening here. So that's why I always suggest that you build these from a blank slate. Because now you're coming in with fresh perspective and you can say, where are we? Where are the fib counts? Where are the pulls? Where am I likely to see resistance? Can I find some structure relative to median lines or channels? Can I find some structure? What are the oscillators telling me? Well, you take note here that we've just gotten into 2 standard deviations from the VWAP. So VWAP would be lower. So we're likely to get some resistance here, which happens to be right at the 200 as we approach the 618. So it shouldn't be surprising that we get some resistance here. We're now just through the 50, hitting the 200. I'd love to see this, all right? I'm a bull, so I want to see this move higher, but I would anticipate some sort of corrective behavior. So remember, it's waves within waves. So we've got a 1, 2, 3, 4, 5, a leading diagonal because we had overlap here from wave 4 to wave 1. So we know we've got a leading diagonal. Common in a wave 1 because the new trend is still being established. Because we've got that, we have the potential for this to be a 1, a 2, and head up to a 3. We've got some targets here. We know we've got this target here from this low, swing high, projected from this low. That's the first target, is the negative 23.6. Then we've got a nice looking target up here at negative 61.8, back to 45.75. Looks like we're making progress here. Expect to see some resistance here at the 618 and the 786 as we approach the median line. Okay, that's it for this video. I will update it throughout the day. Watch the Twitter feed for any new trades, and I'll be back to you later. Okay, guys.